Royal Bank of Canada was already the worst performing Canadian bank stock this year, and it's down today sharply, a little more than 4%. Canada's largest bank by assets said profit for the fourth quarter unexpectedly fell, missing analyst expectations for the fifth time in a row on falling trading revenue, among other things. Right now, look at that chart there. Shows it's down about 5.6%. Here to help paint the picture is Royal Bank of Canada's head of strategy and treasury, Barbara Stymiest. She joins me from our newsroom in Toronto. Ms. Stymiest, welcome to Bloomberg News. Thank you so much for coming on.
Thank you for having me.
The numbers that I just told our viewers, they do not paint a pretty picture. And also yesterday, your largest competitor, Toronto Dominion Bank, reporting profit that missed its average analyst estimate by 5.3%. But between the two of you, what is this saying about the broader economy in Canada?
I think you actually have to look at the composition of our results. And if you look at our largest business, our core retail Canadian business, we actually reported record profits in that business for the year, which I do think reflects the strength of the Canadian economy. Then if you look at our wealth management business, it also posted a strong quarter. Our insurance business, if you exclude the sale of our U.S. business, which we reported in Q4, it also posted good results. And our capital markets, we believe relative to the market conditions, posted strong results. I think what people need to remember is what was going on in the markets a year ago, where there were unusually wide spreads and lots of trading opportunities. So all in all, we would view our performance as a very solid quarter.
Ms. Stymiest, unfortunately, though, you've had 10 straight quarters of losses in international, and that includes the U.S. bank. What are you doing to turn that around?
There is lots of effort being put towards improving our performance in the U.S. We have reinvigorated the strategy. There are significant changes in our senior employee leadership in the U.S. We are investing in the systems and products and delivery network to improve the client experience, and we are leveraging much of the expertise that we have in Canada. I think that you will see the results when the credit environment improves in the Southeast, and I think you will see the results coming through based on the investments that we're making. The question for all of us, of course, is what is the pace of the U.S. recovery, and particularly in the region in which we operate.
And I would imagine, too, a lot of people making that distinction because and we took a look at the Canadian dollar today. The loonie got punished because of some of the information that we're hearing here in the U.S. about that jobs report. Tell our viewers how the two countries are linked economically and how one depressed situation can adversely affect the other.
Well, it's certainly true that the Canadian economy is an export-led economy, and our largest trading partner is the U.S. So to the extent that there is slower economic growth in the U.S., that will have a knock-on effect in Canada. Having said that, though, the core fundamentals in Canada, macroeconomic fundamentals, are extremely strong. We see a strong corporate sector. The macro fundamentals I referred to with a strong fiscal condition and good monetary policy and a good balance of trade means that I think Canada remains well positioned to ride out this period of slower economic growth.
Ma'am, you've had analysts and investors saying that Royal Bank should, quoting here, go big or go home. I'm sure you've heard that before, and we're talking about U.S. retail banking in particular. Which way are you leaning?
I think our focus is currently on fixing our existing franchise in the U.S. And in terms of our other businesses in the U.S., which frankly are much larger than our retail banking business, we continue to invest. And you will probably see us. We are a significant player in U.S. capital markets, and we have a growing wealth management business. So I would say we continue to invest overall in our U.S. presence, given that it's the largest financial services market in the world.
Ma'am, in our last minute, you've obviously gained market share here in the United States. How do you continue that growth? And are you going to be hiring more folks?
We have hired a significant number of folks through the crisis. With having a strong and well-performing bank through the crisis, I think, and our brand continues to improve, that we are an attractive employer with a growing capital markets business, and that's really enabled us to attract strong capital markets professionals, as well as in our wealth business. We have also grown the number of financial consultants that are part of our wealth management franchise, as well as private bankers. So I think we're well positioned to continue to grow organically in the U.S., and that is our focus going forward.
Ms. Stymiest, in about 20 seconds, any new areas you might be getting into?
Well, we're very pleased with our recent announced acquisition in the UK of an asset manager, Blue Bay, and that should close sometime before the end of the calendar year, and we're very excited about continuing to invest in that part of our business.
All right, Barbara Stymiest of Royal Bank of Canada, the head of strategy and treasury, joining us from Toronto. Ms. Stymiest, thanks so much.